welcome. My name is Danny. This is the Beginners Online Trading Webinars. I'm sorry for the delay. Before we will begin, I would like us to go through a quick sound check and visibility for the screen. If somebody can comment in the question section that the screen is visible, okay, and that the sound is clear. Okay, so we can proceed, and in the meantime, we'll explain how the webinar is going to happen. So initially, we'll have a quick introduction to the company, what services we have in our facilities. Excellent, thank you, Alexander. We're gonna have a nice introduction to the company and to the services, what we have in our facilities that can assist you along your journey. The second part will be the majority of the webinar, so we'll learn basic things like sell and buy, the logic behind certain decisions. As you can see now, I hope that everybody can see the screen. There's some things here that we added, some new functions that can be very, that can help you a lot. Okay, and lastly, the third part can be analysis that depends how time goes by and what we will cover in the time that we have right now. Okay, before we will begin, it's important to know that any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, recommendation, or a suggestion. Now, I'm going to go ahead and say that the webinar is recorded. So even if you didn't understand something on the first time or the second time or just any other reason you want to watch it again, you're more than welcome to visit our YouTube channel. Usually it takes up to a day or two. It could be even today, but I don't want to spread any commitments. Yeah, so I'm just going to make sure that everything is recorded as it's supposed to be, and then we will begin. Thank you very much. Okay, so we are back and we can officially hit the road. I'm just going to get myself a nice notepad to write down notes. Okay, so as I said, I'm Danny. This is the Beginners Online Trading Webinars, but we're going to learn some very useful things even for people that are intermediate or advanced. Okay, so as many of you know, a regulated company, we exist since 2006. We have 9 licenses worldwide. The platform that we're looking at right now is called the Web Trader. Okay, in case you got any questions or query, you can access the customer service via the functions at the bottom left. As you can see, this is basically the screen by default. Okay, and this is the customer service. You can access through the chat or through the WhatsApp, whatever you prefer. Okay, or you can send an email to cs@avatrade.com. Now, like I said, because this is the Web Trader, and what we see is the Web Trader. Okay, by the way, to access this screen, all you have to do is just to log in with your email and password. Okay, you don't have to download, you don't have to install anything, and we can simply see the screen over here. Of course, if it looks different, like I said, oh, you forget to put here the .com. Okay, so if it looks different, you can contact your senior account manager or the customer service, and they will apply it on your account. Okay. Now, beside the customer service, you have somebody called a senior account manager. Okay, a senior account manager that can cover the trading queries. So you have customer service to assist you with the customer service, and you have a senior account manager to help you with the trading side. Okay, even things that we're learning here today, such as calculations and strategy and a plan and analysis and all kind of things can be addressed also to the senior account manager. Okay, now, beside the customer service and the senior account manager, as we see, we have the Web Trader among the platforms that we're offering. The other ones that we have is MetaTrader 4 and the MetaTrader 5. They correlate with the Web Trader. So that means that if I'm used to MT4, I can do the execution on MT4 and review it on the Web Trader, and vice versa. Okay, because on the Web Trader you can find many things. I'm just going to show you. I'll talk about it more in a minute. But on the Web Trader, it's very accessible and informative. Okay, so it can help you get more information for your position to do it right. Okay, but like I said, if somebody wishes to trade on the web trader analysis on MT4, he can do that. Same apply with MT5. I can also trade with MT5 and review it on the web trader and vice versa. Okay, and in the app, of course, okay, in AvaGo, you can also do it. It offers, I don't want to say everything that we see here. I can say the majority of the things that we see here, such as Ava Protect and some other features, okay, that are only on the web trader and the AvaGo. Now, beside those platforms, those all, by the way, are leveraged trading with contract for difference. CFDs, contract for difference, the leverage is already here. Okay, we'll speak about it and we will understand how it goes. Now, beside those platforms, we also have Ava Options and Ava Social. Now, Ava Social, it's quite self-explanatory. You can understand it's a social media trading platform. What it allows you to do is to follow other traders. For instance, if I'm a beginner and I'm not absolutely sure what my next step is, and I just want to find out how somebody else is doing it. Okay, so what can I do with Ava Social? I can just review and see how other traders are doing and pick myself somebody to follow. Okay, in a later stage, or maybe not in a later stage, just as an addition function, I can also copy somebody by automatically. Okay, I can either follow someone, that means that I'm going to get his trades, and it's up to me if I want to do the same or not, or I can copy somebody, which means that it's already happens automatically. Okay, both cases, I suggest you'll make the comparison between your balance and the one that you're following. Okay, because obviously if I'm doing the same actions with different balance, could lead me to different result. Okay, quite logic. Now, about Ava Options, we're not going to expand too much. I'm just going to say that the app itself is quite amazing. It helps you see the predictions of what the potential outcome can be. I'm also going to show you here on the web trader how you can do it with CFDs, what can be the potential profit and the potential loss. We'll speak about it in a minute. And yeah, I think we're going to proceed at this stage. For now, we're going to proceed with the web trader. The webinar will happen on the web trader. So I should say a few words just about the facility and the things here that are unique, okay, unique to the web trader and the AvaGo. So for me to see the rest of the screen, the first thing that I must do is to click here on the upper right, two tiny arrows. I don't know if you can see, but there are two tiny arrows pointing on themselves. And if I click it, they're going to expand. They're going to point the other direction. Okay. Now, this is how I can review the assets. We have currencies, commodities, stocks, ETF, bonds, and indices, and cryptos, and so on. Okay, I can either pick my asset from the lists here, or I can put here in the search field. So I can just type in gold, okay, as an example, and I can pick it from the list. Okay, it's one of the two ways. Now, one of the unique things that we added quite recently is the signal section, okay, which I'm going to show you, but first I'm going to fold this down. Okay, and what I'm going to do is I'm going to show you two ways to find the signal. So the first way is just by identifying, you see this blue lightning icon, I can click it. This is the euro versus the Australian. Okay, you can see I expand and minimize the screen. It's irrelevant to what I'm showing you, but just so you know, this is one way to open the signal. You see I click on the lightning icon and it appears. That can also happen with commodities as an example. I can identify, you see, there are those who have it and those who doesn't have it. And if I click, it just opens me the signal. Now, what exactly the signal is? So as I said, if I'm a beginner and I'm not exactly sure what my next step is, one of my question mark will be how to analyze, okay, and which asset to trade, because I'm not fully aware of how the asset is moving or how should I trade it. So what the signal is doing, what the signal is made of, to be honest, is this is based on technical analysis. It's provided by the Trading Central, and it's based on support and resistance. Now, what exactly support and resistance are? They are levels on the chart, okay? Certain levels that help us indicate potential movements, okay? Certain levels based on pivots. Now, the way that it works, as you can see, one of the things that I'm going to point out is the production time. Now, this analysis is already built in the signal. This is what the signal is made out of. And you can see that there are certain levels that the signal is aiming for, okay? Due to that, we understand that if the signal was produced, okay, let's suppose that it was produced, well, not recently, and I'm looking at those levels, it will be possible that one of those levels already occur. Why? Because the signal was analyzed in a certain point, and there are certain levels here, and it's possible it already reached one of the levels. So when I'm using the signal, okay, so I just want to show another way to open the signal, and then I'm going to proceed with my explanation. Okay, so one way is simply clicking on, like I said, from the outer, okay, from the lists, just click it from the list. This is one way. The other way is through the section itself. Now, one of the advantages is to see when was the, it's lined here, it's lined by the time that it was produced. Now, as I explained just a minute ago, why do I care about the production time? I care because there are already certain levels that the signal went through. Okay, we looked at coffee. Let's look at gold. You see, I just click view signals. I click here on the two arrows to expand. Well, this, you see, there are certain levels here, resistance and support. Resistance will be the roof. It will be the above the price, okay, telling me what is the resistance price. It's an edge point. I'm just going to show you, okay, but I'm explaining just to understand the idea. Why can't I see? You see the price here, 2076. I don't even have it on the chart. Why? Because this signal is analyzed daily, and I'm looking at 1 minute, okay. So as I said, one of the things I want to pay attention is the production time. The second thing that I want to pay attention to is the levels that the signal was based upon. And when I want to see the levels, I want to see the chart to get to those levels. Now I can't see it because it's too small. I'm looking at the minute, but if I'm changing to a day, then I can find my 2070. To be frank, I don't even have to change today. Even hours might be enough. Yeah, it might be the similar picture to what we're witnessing here. Never mind. Okay, but it allows me to review the levels. That's what's important for me. It's important for me that when I pick a signal, I know that it was produced not too long ago, that it hasn't passed a certain level that it could have lead me to mistake. Okay, and all I have to do is basically, when I'm done checking this, is just to pick my scenario. Now I want you to see how simple that is. I'm just looking at the section here, so I'm just going to show you. Okay, so the first step is clicking on the signals. Second step is choosing which signal I want. Okay, I click on view signal, nothing special. I can review it by changing the time frame to see a similar picture. Okay, and the third thing that I'm going to do is just to buy, to pick buy or sell. So for instance, we're going to go with a buy. What it does is it places automatically the take profit and the stop loss based on the levels that we just saw. Okay, let me just show you again. There are certain levels here, as I said. Okay, there are certain scenarios, scenario for a buy, scenario for a sell. That means that it's going to automatically place take profit and stop loss. What exactly are take profit and stop loss? When we execute a position, I can execute a position immediately. Okay, let me just show you an example. You know what? I'll go with a buy scenario just to show you. Okay, I can click here buy right now. Okay, and it's gonna execute on the price that I have. And the take profit and the stop loss, what they are doing is they are marking on the chart a certain price, 2070. Okay, that's supposed to be roughly where I marked, right? Somewhere here. Just gonna switch to hours to see it a little better. Okay. Maybe 1 hour will be better, or 2 hours. No. Okay, and in that case, no, it doesn't allow me to see that. That's weird. With 4 hours, we succeeded, right? Oh, there we go. Now, the 2070 is the price that I'm going to close my position with the profit if it gets there, and 2057 is where it's going to stop it with a loss. Okay, just go by the name. It's not complicated. Take profit takes the profit, stop loss stops the loss. And the way that it works is very simple. As I said, if I'm buying, my ambition is that gold's value is going to go higher. That therefore my take profit will be in a higher point, and my stop loss, because I'm buying and I'm losing when it goes down, will be at the bottom of the below the price. Okay, if this would have been a sell scenario and I would sell, oh, maybe I should do it through there, and it can show you. Okay, if I'll go with a sell scenario, it's possible. Oh, it did it. You see, it switched. It switched. The stop loss now is 2070 and 2057. Now the laugh is not exact because again, gold. The signal was not produced now. It was produced based on the price that we saw. Still, it's viable. Still, you can use it, but it's something you want to be careful not to make a mistake, because sometimes having a stop loss or a take profit too close to the entry might not be to your favor. But I guess this is something that maybe beginners will have a little more difficult to understand, but we'll speak about it soon. Yeah, so this is pretty much the signal section. You can pick, like you saw, it's pretty simple. I just pick an asset, I pick a scenario basically. Those steps that I took to ensure that the signal is good for me are the steps that I showed, checking the levels and checking the time that it was produced. Okay, but there is no too much to it. I guess you know the signals. Like I said, it's provided by the Trading Central. What else I want to show you that can also be very, very useful. This is, by the way, more technical analysis wise, right? And this is more to the fundamental side. Just on a nutshell. So when we're analyzing, we have two kinds of analysis. We have technical. And we have fundamental analysis. Okay. Now, the way that this works is I can analyze what's happening on the chart based on support and resistance and the things that we saw. And I can also analyze based on the news. Therefore, supply and demand, some other announcements, events, which I'm going to show you through the economic calendar. Okay, some useful things. And the benefit using the news section is that it's also showing you what it's related to. So for instance, if I caught this one, right, in this morning trade, okay, we're not going to read that, but you can see that it's related to two assets. So I can benefit two assets analysis. Let's see if we can find something else. Not for now. Let's try actually. Okay, you see this one is related to four assets. Okay, so there are certain interesting things here. Just explore by yourself. Maybe I've done it a little too fast. I'm just going to show you now the economic calendar. I'm just pointing on the Globy thing and an economic calendar. And what I want to show you is that you can filter it by the, oh, I should have never mind. You can also filter it here. You can also filter it here to what's relevant for you, to your strategy. And in here, in the economic calendar, you just click on the flag that you want. I'm going to show you the list now. I can click here on the tiny arrow, and when it falls down, I have all countries here. Well, relevant countries here. And I'm just going to pick, let's say I want to go with the yen as an example. Okay, so all the announcements, all the events, everything that's important, things that has reoccurrence, can also show you the previous numbers. The way that this works is you have levels of impact that we assume that will occur on the market. So this is light, impact, medium, high. And you can also filter it by that. Oh, there we go. You see high, low, medium, and high. I can reset the filter here. I can reset the filter here. If I just demark, so it's going to show me everything. Here I have this tiny magnifier that allows me to also search. Just a second. We have to get rid of that. Okay. Oh, we are marked on the yen. Okay. I was hoping to show you what's happening. Let's just mark this. Okay. And okay, it's not showing me because I marked on Japan. Let's, unfortunately, we're gonna get rid of this. Okay, let's try. Okay, so you can find all kind of things here in the economic calendar. Things like the CPI and the whatever's related to government decisions, and all the important things can be found here. Like I said, by searching or by the date. Okay, so the non-farming payroll is usually the first Friday of the month, so you can just review it close to the date. Okay, to the first Friday. Never mind. I don't want to delay about it too much, but as you can see, it's very flexible and very, very useful. You can also pick the date itself if you're looking for a certain announcement related to the interest rate or to the employment rate or anything else. Okay. Yeah, so we saw the signals, the news section, and the economic calendar. There are some more things here, but I don't feel like using our time just to go through that. Okay, so we can, I think, begin with the second part. Before I'll begin, are there any questions regarding what we saw till now? Any questions about what we saw? Absolutely. Thank you, Freddie. So we can carry on with ease. What is the average success rate of signals? Oh, that's a wonderful question, Alexander, but I have absolutely no idea, and I'm not sure that anybody can determine that. Like I said, when you take a signal that was just, think about a bread, right? You're taking out of the oven. When the bread is just coming out, it's fresh and tasty and so on. If you take a bread that was baked, I don't know how long ago, so you can't expect it to be at the same level as the bread that just been brought out. I hope you understood my metaphor. Okay. Deverton, what is AvaProtect? Oh yeah, that's maybe something we want to give a word about. And for that, we are going to pick our, you know what, our dedicated candidate, I think. We're going to go with gold, just for the sake of the discussion. So thank you both for your questions. The way that AvaProtect works, so I'm just going to sharpen the question so everybody will know. Deverton is asking, what is AvaProtect? So AvaProtect is allowing you to protect your position for a certain time frame. Okay, and whatever you lost during coverage, you will get back. There is a fee when using this service. Now, the way that this works is very, very simple. Let's suppose that I'm looking at gold and I'm not exactly sure where gold is heading, if it's going to proceed going bullish or it's going to turn around. So what I can do is I can click on this, I can just mark the box here, okay, with the golden shield. I can also click on the shield, it doesn't really matter. And this is one of the features you're going to find on the AvaGo, by the way. Okay, you can find it on the app. It could be very useful from the reason that I'm going to show you now. And as I was just writing down, as you can see, you can protect it for a certain time. That means that if I'm not sure what will happen in the next, let's say I can cover it for 1 hour up to 2 days. Let's suppose that I'm not exactly sure what will happen in the next 2 days. Okay, so I can mark here for 2 days to cover my position. Let's suppose that we're gonna go with, now we have 9 ounces. Let's say we want to go with 20. I want you to see that the fee here is going to change from 90 to 200. Okay, so it's going to increase with the amounts of quantities that I'm going to acquire. So for instance, and also there are 2 factors that affect the fee. One is the how many units. Okay, so in this case, we're going to go back to 1 hour. Okay, and to show you, so 1 hour it was 74. Okay, and the second thing that can also affect the fee beside the amount of units is the time. So I want you to see we have 20 units, we kept it as it is, and we have 74 for 1 hour. We're going to climb 3 hours, 111, 117, and 167. And if we go all the way up, 2 days where we were, so 200. Okay, very simple. The way that it works is exactly as I wrote down. Whatever I lost during the coverage and only during the coverage, I will get back. Okay, now when I'm using it, I have a fee. When I don't, I don't. Okay, very, very simple. Now, what I want to, again, just so you can benefit, just so you can enjoy this product to its full extent, I'm going to advise you to make this comparison between your fee to your potential profit. Okay, and that means that if I'm going to click on the take profit, what did we speak about the take profit that it does? It closes my position with the profit. If it gets to a higher point, considering I'm with the buy, and I go to a higher place, it can close it and it can close it and give me a profit. This is why it's called take profit. Okay, so for instance, we're going to increase the value by 20 from 69 to 89, just as an example, because I acquire 20 units and there is $20 difference between now price to the price that I'm aiming for. I find it quite beneficial. Let me just move this one to 89. Yeah, actually, let's make it as precise as we can. No, I don't want to play with it because then it will burn our time, our dear time. You see, if it's messing around, what it does is it doesn't let me land the exact number that I want. So I'll teach you a trick how to maneuver with it. I'm going to click on the line twice quickly. Okay, I just clicked it. I clicked twice quickly. Okay, and I'm going to change from inside the coordinates to what we want, which in this case is approximately that, and we're even gonna give it a color. Okay, yeah, that's it. Oh, it flinched down. Maybe we should have, never mind. Okay, but it lets you see the same similar result. Why am I making this comparison? What could have happened if I wouldn't aim for this number? What could have happened if I would aim for just $10 up? Let's see together. What do you think about that scenario? Is it wise to do it this way? Paying 200 quid for 200 $1 profit, is that even worth using the service or not? What do you think, guys? There is a reason. The reason that I'm showing you this comparison is that you'll be able to benefit the product and you don't end up making a ridiculous fee versus your profit. Okay, this product is amazing, but you need to know how to maneuver with it. Yeah, okay, so we can carry on with ease. Are there any questions regarding AvaProtect or anything that I said previously? Just gonna take a sip of water. Sorry, guys. Okay, so let's carry on with ease. I'm thinking maybe let me show you another asset. We looked at gold enough for now. Alexander, why AvaProtect better than a stop loss? It's not, God forbid, it's not better than a stop loss. It's not better than a stop loss, and I'm going to show you why. Let's suppose we're going to take the same numbers. What happens if I don't use, let's suppose that, you know what, let's just keep it as it is. No, it was 89, right? What was it? Oh, 87, sorry. Okay. Demands on can always trade without stop loss, strictly speaking. Guys, I want you to understand the situation here with AvaProtect. I don't know if you saw, but I wrote down specifically that you're only getting back the losses you lost during the coverage. So that means that if, for instance, I choose not to use a stop loss, which I can, I'm not obligated by any way to use a stop loss with AvaProtect. I can choose not to. Okay, so let's hypothetically say we don't have it on, and it goes against me. Okay, for more than 2 days, I kept the position. I got the 200 back. Let's suppose that my first line of defense was, I don't know. This is where it got in 2 days. Let's suppose. And God forbid, I kept it for another, I don't know, 2-3 days. Okay, down till here, I'm gonna get the 200 back, no problem. Okay, if it happened during 2 days, no problem. But what happens after the expiry? Between that and that segment, okay, I'm not gonna get back. In fact, I'm not gonna get back anything that that after the expiry, and I cannot expand the time that I'm covered with. Okay, so Alexander, it doesn't replace the stop loss. It's not better than the stop loss. Stop loss is a security net that you keep to yourself and a point on the chart that you decide you don't want to carry on with a trade if it passes that point. That's the nature of the idea. To apply it or not to apply it, that's entirely up to you. That's also entirely up to you if to keep the position after the expiry or not. You can schedule and say, I don't want to keep it more. I just want to close the position when it's done. I'm going to get my money back, and I'll choose if I want to cover another position. You can choose to do it. But thank you for the lovely question. It's good. It's refreshing. Yeah, and the one more thing that I'm going to, just before we carry on with ease, is that gold, silver, and currencies, gold and silver, are the only they're only, just a second, what can I trade during the States since it's still holidays for September? Oh, well, that's an interesting question, but just a second, sir. What I wanted to say is that AvaProtect can be useful with Forex, just a second, Forex, gold, and silver. Okay, just before it skips my mind. So Forex, gold, and silver, this is what AvaProtect is applicable for. Yeah, we're modifying it, so maybe in the future it will change, but that's what we have presently, and the time left is between, like I said, 1 hour up to 2 days. Okay, guys, so I don't think we should delay on AvaProtect any further because our time is slowly but surely running out, so we better catch up with it. And okay, so I would like to find you guys. What was the story with coffee? It looks pretty blunt. Just a second. How is wheat doing? Okay. What about silver? Yeah, okay. I guess we can stay with it. It's not bad. Okay, so the asset that I picked is silver. I'm just gonna give a guide through about the functions here, just so we can be on the same page. So we already know the search field, which we used. Okay, this is how we brought up gold. This one we also know. I want you to pay attention to this toggle thing here. Okay, there are time frames from minutes, hours, days, weeks, and months. Okay, this will be the minute section, this hour section. Now, how can I verify that the candles that I'm looking at are indeed dailies? I'm going to show you in a minute. So we have just before that, I'm showing you that you can change the shape of the chart, if it's going to look like a line or candlesticks or bars. Okay, and I can verify through the crosshair here. So as long as I keep my hand above the chart and it doesn't show me any information from the candles, what I must do is I need to change Herald is the chance risk ratio is taken. I'm not. Can you elaborate this question? I want to answer you, but I'm not sure I understood it. Okay, so to get information from the candles, I'm just going to change here from no crosshair to crosshair, and then every candle is a day. Okay, I can confirm it. As you can see, this is 14th, 15th, 16th. Okay, it's changing right here at the squarey thing. Yeah. Okay, 16th, 17th. Okay, same around here. So 18, 19. Okay, this December. If it would have been weeks, so each candle would have been a week. Okay, let's get rid of everything here presently. Okay, so how do we begin? The first thing that we did is we picked an asset, and now we're gonna jot down a few things. Okay, that's supposed to help us construct a position that would make sense. The way that this works is I can just I can fill in my ambitions and see if the market can provide me with that. Okay, so the goal in this scenario, how much am I planning to make with silver? Let's suppose that I want to be ambitious and make $1,000 in so the goal, it's quite obvious why I want to aim for a certain amount. I don't want to gamble, just click here, buy and pray. Okay, I could, maybe I'll make profit this way, but it's not what I'm teaching you here today. What I'm teaching you here today is to be able to snipe potentially to the profit that you're aiming for and the stop that you're the loss that you're aiming for. And this is pretty connecting to your question, the risk ratio. The risk ratio, okay? We'll speak about it, we'll understand, but by the nature of this four ingredients, I need to think about a position that makes sense. First, I don't know if it will work or not. I don't know if it will work exactly as I planned or not, but I will do my best to analyze the situation and understand if this position is something I want to take or not. Okay, and it helps me also to be careful, and I'll show you how. Now, the time that I'm choosing has impact on what I'm going to analyze. If I want to make this $1,000 in a year, I'm not going to analyze minutes. Okay, again, I can. It's not going to cause me any damage, but it's just going to burn my time. Okay, if I want to do this $1,000 in a year, probably I can analyze months or weeks maybe. Okay, but if I'm planning to make it in a day, I'm not sure how analyzing monthly candles or weekly candles can contribute. Maybe, again, maybe it can't cause any damage, but okay, so in this case, I'm gonna do it 1 week or 7 days, whatever you want. And the next thing that I'm gonna do, now I know that I can analyze days and weeks, right? Because I took a week. Okay, this is the time that I'm aiming to make this $1,000 through. And the movements that I'm gonna check is actually the price difference between the now price to the gold price. Now, the now price is 24 per ounce. This is silver, and with silver, you have 10,000 in one lot. That means, let's just put here a formula. Okay, so easily 1 unit multiply $1 equals $1. 10 units multiply $10 equals $10. Oh, sorry. No. That's God forbid. Okay, and 1 unit multiply $10 equals $10. Okay, with this logic, we can take one lot. As you can see, one lot here. So one lot equals, just for silver, it changes. One lot equals 10,000. Therefore, $1 movement multiply 10,000 will be, how much can I make, guys? I want the clever guys to respond to that. Guys, I want you to look very carefully on the equation here, which is super simple. When I take 1 unit and it goes across $1, so from 24 to 25, okay, let's suppose this is a buy scenario. Okay, and if this is a sell scenario, so it will be down to here somewhere. Okay, my question is, if it goes from here to here or from here to here, which is $1 up or $1 down, look, I have 10,000. I don't even have to think too much. It's showing me 10,000 units. How much can I make or lose with this price difference, with this movement? We're calling it movement, the movement between the now price to the gold price. How much, guys? How much is $1 multiply 10,000? Any answers? Come on, I'm trying to understand the levels. I don't want to rush too fast. How much is my potential? Let's click here on the take profit and stop loss. As we saw, it helps us indicate the potential profit and the potential loss, right? So let's look at it together. We're going to change it to 25.044. What is my potential profit, guys? Okay, let's try the same exercise at the bottom. Is that understood? This calculation, is that understood? We can multiply the units by the movements, and then we can know what potential loss or profit we can anticipate. Okay, is that clear? Are there any questions till now? Even though this is really the beginning. Okay, so let's proceed. Now, to my next question. Is this dollar going up $1? Is this too ambitious or is it realistic? Let's suppose 24.44, and the gold price is 25.044, right? So let's switch. Instead of one lot, we're gonna go with a minimum. Okay, which is 100. And okay, so is this a is this a realistic price to aim for or not? Let's see. If it gets from, just a second. Oh, something didn't go well in here. We're gonna change it to 25. Okay, if this leads me to 100, we see that 100 multiply this $1, it leads me to 150, right? Oh, sorry, something here doesn't add up. 55, and this is 55. Oh, right, we have the spread. Yeah. So as we can see, we can use the same formula. Okay, let's suppose that this $1 is realistic. Oh, the way that I can identify if it's realistic or not, it's actually a very nice indicator that I'm going to show you. It's called the average true range. I'm going to click here on the FX indicators. I'm just going to apply AVE. Okay, the type AVE, average true range. And then I'm going to click and drag it to the box. We're going to change its color just for fun, maybe mustard. Okay, and click save. Now it's showing me that's silver in 1 day, because we are marked, remember, we are marked on 1 day. It's moving not approximately, this is again the average. It's moving 32 cents. It's moving 32 cents per day. It's moving 32 cents per day, and let's switch to weeks. Okay, so what I'm asking for, this dollar movement, is it in the range or out of the range? Is it this dollar movement, is it in the range or out of the range, guys? In the range. Perfect. Who else thinks that this is in the range? Let me make it even clear, a little clearer. Right? Guys, that it's in the range. It's in the range because the range is 1.3 and we are asking for $1 higher. Now, let's suppose that this is indeed our goal price, okay, for the sake of the discussion. And now the goal is 1,000 and we divide it by, okay, how many units do we need? Again, I'm putting down the formula just so you can correlate it to any other asset. To be honest, I don't even need a calculator for that. Right? How many units do we need, guys? Using the equation here. 1,000, perfect. Yeah, thank you very much. Very, very simple. So according to our findings, we are going to put down 1,000 here in the units. We should see here 1,000. That doesn't happen. And I want to, oh, sorry, that needs to be this way. Yeah, actually it needs to be this way, but I know, I'm absolutely sure it's going to keep on bouncing, so I don't want to bother and keep on changing it each and every time. In here, we're going to try our best to also maybe, yeah. So we can see that now we have completed the composition. Now we know that this is a realistic movement. We also know that it can lead us to 1,000. And, oh, sorry, this needs to be 1,000. Okay, we know that everything is exactly as we wanted. Now, I have a question. So, is this guaranteed to succeed? Oh, sorry, let me, never mind. We're gonna keep it marked, even though it's quite revealing the answer of what I was about to ask, but still, never mind. Let's suppose this was off. Okay, is there any guarantee, and let's get rid of that as well. Okay, let's suppose we're only thinking about the profits now. Let's suppose that this is the goal and this is the, okay, is there any guarantee that when we click here buy, it's gonna jump to here, or it can also go against us? We've already learned from AvaProtect that it's possible that we are going to have a loss with silver. Now, I'm not going to use AvaProtect for the example. I'm just going to show you. I'm clicking here on the stop loss, and I'm marking the same laugh for the other side. Okay, my potential loss is almost identical. I can say it's similar to the profit. Now, is this a wise decision? Now, this is something I'm going to bring down to the table. One more thing. So take profit is 25. Okay, sorry. 1,000 profit and stop loss 23. Okay. $1,000 loss, 10% exposure. Okay, before people go on a rampage that I didn't teach what exposure is, I'm just going to say that exposure is basically the comparison between your loss to your balance. Okay, so Harold here asked about the risk ratio. Okay, straight away, no, this is too much risk. I see people start writing down that this is too much. And why do you think that this is too much? Why do you think that 10% is not an acceptable loss? I still have 9,000 to go with, right? I mean, let's look at the numbers together. Is that so severe? Right, I still have another. Who can tell me why is this? Why 1,000 has people here writing down that it has significant impact? Why? I still have 9,000 to recover with. Maybe I'll recover. Not the only position. Thank you, Juan. So what does that mean, Juan, that this is not my only position? If it's 10%. How many positions can I go with and make this mistake before I wipe out my account? How many? 10. Exactly. Exactly. Thank you, Alexander and Frank. So we understand that this exposure might be off limits, might be too much. How can we modify though? From 10% to 5%. How do we do that? Anybody know? How can I modify my, I want this one of the abilities that I need to have. I must have the ability to modify my one. I nearly gave you the answer. How can I modify this so I can control my risk money management? How? Increase the stop loss. Okay. Alexander, raise the stop loss. Okay, so obviously I'm gonna exaggerate, but I'm gonna exaggerate in purpose to teach. Okay, let's suppose that I go with my stop loss from 23,050 to 23,550. Let's suppose somewhere here. Okay, don't judge me for the 0.001. Okay, let's suppose 23.549. And again, if I wanted to be precise, I'm just clicking it and changing it, right? No hustle. Changed a lot. Who said that? Very nice, George and Harold. Okay, changed a lot. So what do you guys mean by that exactly? So if I'll change a lot, let's suppose I don't want to give up my analysis, which is a great solution, by the way, but let's suppose that I want to keep my analysis here. Okay, I don't want to give up my nice stop loss that I already, okay, that we've already, oops, something happened with our line. There we go. Let's suppose we want to keep it this way. So the other solution is we can just minimize the lot size, right? From 1,000 to 500. It's true that my profit ratio went down as well, but at least my risk money management is as I wanted. And I can also expand the take profit if I really want to, right? It's not an issue. Okay. Do we have any questions? We still have 4 minutes left, which I'm going to show you how much money you need in the position. Before I'm doing that, is there anything that wasn't clear? Is there anything that really anything you would like to share with me? Anything, guys? Okay, so okay, thank you. So let's proceed. At this point, like I said, the missing part is obviously they understand how much money we need, and that has a definition called margin impact or margin requirement. The way that it works is very simple. What we're gonna do, unfortunately, guys, I'm gonna get rid of that for the time being. Okay, the margin impact equals necessary amount to open a position. Okay, and the way that this goes is very simple. Okay, Deverton, do you do copy trading in different session? You don't really need me for that, Deverton. You don't. You just need to contact your senior account manager. Hopefully you have one, and it's just gonna guide you through. It's really simple. It's really simple. We made it in a way that allows you to basically click. Yeah, don't worry. It's very simple. Vincent Anjorin. How can I manage my risk to risk no more than 1%? That's an excellent question. Just let me finish this explanation, and I'm gonna give it. Wait, maybe I can bring down what we had. No. Okay, never mind. I'm just gonna show this quickly, and then I'll just so everybody can see. Okay, this is the question that Vincent asked, which I'm gonna answer in a minute. What I wanted to show you is the margin impact is based on the value. The value here is 24,063 multiplied 500 units. Okay, that equals to 12,000. How do I know that? Because it's written here, value. I don't have to go too far, right? Beside that, I have the leverage. The leverage is, it multiplies my buying and selling power. Okay, very straightforward. And in this particular case, my leverage is 1 to 10. Now, if it multiplies my buying and selling, what I can simply do is I can divide a value by, okay, so value divided by leverage. Yeah, that means 12,000 divided by 10 is how much? Okay, now I want to clarify something. Usually, I don't want to say usually, but people can easily be confused with how much you're exposing into the trade versus how much you're exposing as exposure out of the account. So as I said, if the potential loss, look, I want you to see that, Vincent. Yeah, let's go with that. Okay, so let's suppose that the balance here is 10,000. Okay, let's just keep it as it is. 10,000, and the loss, as we said, is how much? 5%. How can I make? I want you guys to help me to help Vincent. How can I modify loss 5% to? I just want you to see how simple that is. That's all. How can I modify the same way? It's exactly the same way. Look what happens if I minimize my 500 units to 100. What happens with my loss? How much is it now? Okay, how much is it now though? Can anyone tell me? Is it more than, let me ask you otherwise, is it more or less than 1%? Less, exactly. Is this the answer that you were looking for, Vincent? You have to consider though that this 1% is solely for this position, and it means that if you took another, I don't know, 4 positions, you're at 5% total exposure for the account. So you also need to consider the exposure for the account and the exposure for the position. So you don't, God forbid, you misjudge your risk money management and blow out a big chunk out RD account. Okay, so guys, unfortunately, our time is up for today. I just wanted to give on a nutshell the solution for Vincent's question. So I thank you all for coming. It was a pleasant webinar. I hope you'll join us tomorrow with a live Q&A. I wish you all, whoever is not going to join us, happy holidays and happy new year. And that's it. It's been a pleasure. Have a good day.